Much like buying a home, for a lot of people, being their own boss or owning their own business is part of the American dream. But when it comes to getting a mortgage, self-employed veterans can face some unique challenges. Self-employment income can be less consistent than income from a salaried position, and that inconsistency often means more caution from mortgage lenders. In order to verify your income and get a handle on whether it's stable and likely to continue, lenders will often need to see 2 years of tax returns along with other key business documents. First, let's talk about what self-employment typically means. It's a broad term that can cover a lot of different employment scenarios. Some of the more common include borrowers who have sole ownership of their business. You'll often hear these called sole proprietors. There's also borrowers who own at least 25% of a business, so there's some sort of business partnership. And then independent contractors. These are folks who have most or all of their income reported on IRS 1099s rather than the typical W-2. Now, retirees, disabled veterans, and others might document their income with a Form 1099, but these situations aren't typically viewed as self-employment. And that's an important distinction because employment guidelines, income guidelines for self-employment are often more stringent. If you're self-employed, you'll need to show that your business is on solid financial ground. Lenders will often require your most recent 2 years worth of tax returns for your business and for yourself. Why 2? Really for a couple of reasons. 1, lenders will look to calculate an average for your income to better gauge your earnings trajectory and your ability to repay that loan. And 2, they want to make sure that your income isn't headed in the wrong direction. Decreases in self-employment income year over year can be a major red flag. And if that decrease is too steep, lenders might ultimately decline your loan application. Now, what constitutes too steep will vary by lender, and it's often at the discretion of their underwriting team. You might have a perfectly reasonable explanation for a 5 or a 10% drop in income year over year. In other cases, the decrease could signal major financial distress and push underwriters to ask for more documentation or even to reject the loan. Every self-employment situation is different. Depending on your particular circumstances, lenders might want to see things like full business income tax returns for the last 2 years, along with full individual income tax returns for the last 2 years, a year-to-date profit and loss statement, current business balance sheets, a list of stockholders or partners, and more. At Veterans United, we will typically need 2 years of tax transcripts and tax returns to verify things like rental income, income from schedules A, C, D, E, and F, and other unique income streams. Lenders aren't likely to consider you self-employed if you have a side business but earn most of your income as a salaried W-2 employee. But if you want to count your income from your freelance work, lenders will want to document that same 2-year history from your tax returns and 1099s. Now, in addition to the income figures, tax documents also give lenders a look at business losses and business expenses. And that's critically important because mortgage lenders are looking at your net profit, not your gross profit. Any losses or business expenses that you write off on your taxes, that's not something lenders can count as income. So for example, let's say that last year your business pulled in $100,000, okay? But you ended up writing off $50,000 on your taxes. Mortgage lenders are going to look at this, and for the purposes of mortgage qualification, they're going to say that your income last year was $50,000. Self-employed veterans should keep this net versus gross difference top of mind if a home purchase is on their horizon. Many business owners utilize losses and expenses on their taxes, but lowering your tax burden can come with trade-offs that impact home buying. Calculating self-employment income can get complicated, and guidelines and policies will vary by lender. This isn't to scare off self-employed veterans from pursuing a VA loan. We help a lot of self-employed borrowers close on a VA loan every single month. It's more making sure that you're starting this journey with the right expectations and knowledge base. Talk with a Veterans United loan officer if you have any questions about how we might view your particular self-employment situation.